For more on Texas Instruments' purchase of National Semiconductor and Bloomberg's exclusive Google antitrust story, we bring in Ken Allen. He is a portfolio manager at Rowe Price, and he owns shares in both Texas Instruments and National Semiconductor. Ken, thanks so much for joining us this morning. Before we talk about this combination, we want to start off with Google and this exclusive story from Bloomberg. Should Google just reconsider this purchase? Would that sort of lessen some of the pressure on the company?
Well, I think Google finds itself in an interesting position, and as a shareholder in Google, one interesting thing is that the company has, in a very short time, just the past decade or so, become one of the more dominant companies in the overall technology industry. And so it's not surprising that when they look to do acquisitions, those would start to draw scrutiny. I think that for them to back away now would be kind of an interesting signal relative to future acquisitions, and because this is a relatively small acquisition, particularly in the scheme of the size of the industry they're in and the size of Google, I think that they're likely to forge forward.
But as a shareholder, would you want to see Google fight the FTC? I mean, that can take years and it takes a lot of money. It's a huge hassle. You're saying it's worth it?
I think that Google needs to make the moves that they think are best for their business, and in instances where they think they're on the right side of things, they should move forward, as in this case they seem to be doing.
All right. Well, we want to shift gears here and talk to Texas Instruments. Dom just talking about this purchase, $6.5 billion in cash for National Semiconductor. Do you like it at that 80% premium? We know you own National Semi, so obviously you are probably pretty happy with that, but does it make strategic sense?
Well, from the National Semi side of things, as you say, it's a very large premium at 78%. Above where the stock was trading, but there's a big difference between large premium and large valuation. And from the Texas Instruments side, the multiples that they're paying, if you look at earnings and cash flow, and if you look at the earnings power in particular of National Semiconductor, the price is actually not that extreme. So I think a good case can be made by Texas Instruments that with the scale that they'll gain, with the ability to put National's products, which are in many cases market leading through Texas Instruments' really strong distribution and sales force, they can augment the growth such that this, if they execute, can be a strong acquisition for them.
Ken, is that going to make enough of a difference, though? You'd figure that whoever's manufacturing electronics and needs analog chips, the kind that National Semi produces, they'd already be sourcing those products from National Semi. Why is it that having the Texas Instruments sales force, big presence in China, is going to make that much of a difference? Do those personal relationships really matter that much?
Well, what's a notable aspect of the deal is that National Semi, around 5 years ago, really focused on profitability and taking up their gross margins and operating margins as well. And in the last couple years, they've really turned things toward focusing on revenue growth. So they've emphasized revenue growth, getting new design wins and moving into newer and faster growing areas in an effort to reclaim market share that in the last 3 to 5 years they lost. And so Texas Instruments really is looking at the ability to amplify those efforts that have already begun under National Semiconductor and grow that business faster than it has been growing.
All right. It sounds like strong rationale for a deal. We'll see if it all plays out as anticipated. Ken, thanks very much. Ken Allen, portfolio manager at Rowe Price. He owns shares in both Texas Instruments and Nat Semi.